I want to introduce Chris Lassen, the co-founder of Lizard Indicators. As you know, they are a leading provider of technical analysis tools for NinjaTrader since 2014. And the greatest part about this is we got our start in 2014. So 2 long-running honest companies helping traders to build their profits. And Lizard Indicators, they build custom strategies using open source and proprietary indicators. They're a longtime partner of Shark Indicators. Chris combines research-backed logic with hands-on experience to teach traders how to trade smarter, not harder. And then everyone also knows Harry, better known in the community as Fat Tails. Chris launched Lizard Indicators with Harry, and Harry's the developer behind the indicators featured in both the library and the premium suites. With his deep knowledge of statistical modeling and system design, Harry's contributions form the technical foundation of Lizard Indicators. So here we go. We're going to get started. Let me just pass the charts over to Chris, and let's make sure that everyone can hear and see Chris. So give us a minute. It's been a long time since I've actually shared an indicator, shared a room. So let's make sure that Chris sees everything he needs to see. And right now it's looking good. I can see your charts and your mic should be working.
Can you, what do you see my disclaimer here, I suppose?
Yes, everything looks good. So take it away. It's up to you, Chris.
Okay, so it's just the white screen that you see here with the disclaimer on it, right?
Correct, yes.
All right, good. Well, many thanks for the intro, Lee. We've always been fascinated to see and discover all the different ways that it's possible to succeed in the market. So excited to follow your presentation a little bit later on here today. We're also a big fan of the Market Wizard series by Jack Schwager, and always on the lookout for new ideas. So many thanks for reaching out and making this happen. The curiosity and drive to find new ideas was one of the reasons Harry and I founded Lizard Indicators more than 10 years ago. And as you mentioned, our base offering, the indicator library, includes a wide range of tools for technical analysis. So you'll find trend filters, volume analysis, support resistance, momentum, oscillators, you name it. Most of what's out there in literature on technical analysis, you'll find as an indicator in the library. So this is what our website looks like. So if you haven't been there, I just want to do a quick intro on what that is all about. So this is where you find the library collection, and the squeeze indicator that we'll talk about shortly is one of about 150 open source indicators that's included here. And we'll also talk about one of the tools from our premium suite, the range projections. And this is where you'll find our proprietary indicators for more advanced filtering, timing, and execution logic. And then we also have the strategy toolbox, which is a resource to help traders build and validate rule-based setups. So that takes you from an idea to live execution, combining objective rules, risk management, and automation so that you can trade with discipline and a proven statistical edge. All right, so for the squeeze, it can be described as a situation where the market is building up anticipation for the next move up or down. It's a fairly well-known trading setup, and there are a few different versions. So we'll start off by looking at each of them. First, you have the Bollinger Squeeze, which occurs when the standard deviation reaches a minimum volatility threshold. compared to what's seen in the look-back period. And then you have John F. Carter's version, also known as the TTM squeeze, as described in his book, Mastering the Trade. That is more of a consolidation squeeze, when the Bollinger Bands move inside the Keltner channel. And finally, you have our version, the Lizard Indicators approach, which we call the full squeeze. It applies both of the Bollinger and Carter squeeze scenarios at the same time. So you're then finding scenarios where there's low volatility and market consolidation at the same time. Okay, so for the Bollinger squeeze, the bands here are displayed as standard deviation levels above and below a moving average. So you see here the bands widen in periods of high volatility and then narrow when there's less volatile periods. A classic squeeze occurs when the Bollinger bandwidth or the standard deviation reaches a minimum for the look-back period. So typically that's 120 bar look-back period. That's what we have as default. And Bollinger also suggested different methods for identifying the direction of breakouts. So he's using the relative strength index, RSI, often together with the volume-based indicator. And here's Carter's approach, and he's taking the Bollinger Bands with the Keltner channel. And if the Bollinger Bands narrow in width to a point where they are inside the Keltner, it becomes what he calls trade the market squeeze. So that's where the acronym TTM comes from, trade the market squeeze. And Carter basically then compares the true range volatility with the directional volatility. So it's not necessarily a low volatility scenario, as you see here, but a situation that you'll find in consolidating or sideways markets. As for the breakouts, they will occur when the Bollinger Bands move back outside the Keltner channel, and Carter validates those setups by using a 13-bar momentum period. And here we have the full squeeze. That occurs when both the Bollinger and the Carter squeeze scenarios materialize at the same time. You have both low volatility as indicated by the standard deviation for the look-back period and a low true range volatility. And for the Bollinger squeeze, we want low volatility, not necessarily the absolute minimum, but low when compared to what you saw in the look-back. So again, by default, we've set it to 120 bars. So that is determined by a volatility threshold. And so you can play around with that in the indicator dialog box, increasing the value. The low volatility definition then becomes more stringent. So you'll then have fewer low volatility setups. Finally, we've added a price action requirement. So the breakouts has to be accompanied by what we call thrust bars. So there's a signal here, this arrow. So for the long signals, the signal bar has to have a close above the high of the prior bar, and vice versa for shorts. The signal bar has to close below the low of the previous bar. Okay, so that's we've looked at the squeeze channel so far, but in my opinion, it clutters up the chart quite a bit. So it's good to learn and understand what goes into the squeeze scenario in the background, find out how it's identified in the first place. It's sort of like looking under the hood. But now that we have that down, we can move to the TTM squeeze indicator, which is a more elegant display, I think. You see the trend and momentum scenario here on the lower panel, as well as here in the paint bars. So that gives you a cleaner chart while still having access to all the information that you need. And you have that with the squeeze dots that you see here. So the white one here, that is a Bollinger squeeze. The cyan here is a Bollinger-Keltner squeeze. And when you have these yellow dots, you have a full squeeze. So both the Bollinger and the Bollinger-Keltner definition of the squeeze setup. Obviously, the signals have to align with the momentum and trend indication. But again, the breakout ultimately has to be confirmed by the price action. So again, here a long signal with a close above the high of the previous bar, so the thrust bar. And that confirmation can lead to slightly later entries, but typically you'll have higher probability signals that way. It's difficult to argue with price action, so I think it makes sense to have this in place here. There is a couple of additional filter parameters here. Minimum squeeze bars. So you're required to have a certain number of consecutive squeeze bars. So by default, we've set that to 3. So for the Bollinger and the Bollinger-Keltner squeeze here, that would not be sufficient here. There's just one of each. But for the yellow ones, we have met that requirement. So that's why we see the signal here. And then we also have a maximum trigger bars. So the maximum bars allowed for a valid signal to trigger after the squeeze ends. And we've set that by default to 5. And so here we have 1, 2, 3 bars. So again, within the requirement for the signal to trigger here. Again, that's 2 additional requirements, and you can customize those as you please in the indicator dialog box. So with the squeeze information on the lower panel, it's easier to consider other price benchmarks. And here we have the daily range projections added. And for this example, we've configured support resistance levels based on the volatility seen during a specific time of day. So between 8 and 9 Central European time, that's where I'm based, when economic data is typically released here in Europe. And these are what we call noise bands. And what they do is to show us how far noise traders typically are able to drive prices. Basically, what we've done here is to average the noise moves for the prior 4 weeks of trading. And that way we have a statistical basis for locating breakout levels when news releases drop. And the daily noise is defined by the smaller of the high minus open and the open minus low. And so the upper band is then calculated by adding the expected noise to the open. and the lower band by subtracting the expected noise from the open. Typically, what we see is that noise moves are not driven by news or fundamentals, so they can occur without participation of higher time frame traders. So if prices break beyond these noise levels, it typically indicates institutional participation, and that's when these targets here come into play. We've added the range expansion bands here, and they're found by looking at the previous 20 trading sessions, so also 4 weeks, averaging the difference between the open and the furthest extreme from the open on each day. So to calculate the bands, the expansion bands, the expected expansion is added to and subtracted from the open. So I realize this is probably a little bit esoteric, so I've created a illustration here to elaborate in just plain English. So we're looking at, on average, how far the bulls or the bears were able to drive prices away from the open. And the larger move is defined as expansion, whereas the smaller is noise. So here, bullish expansion towards the high of the candle, and the downside here was a noise move. Second example, bearish expansion towards the low of the candle, and the move towards the high was noise. And so by doing this, averaging, you are able to estimate how far random trades initiated by noise traders are likely to move from the open versus the significant expansion trades. So as mentioned, noise moves are not driven by news or fundamentals and can happen without participation of the institutional traders. And here's a short setup. We've broken below the lower noise level, and the signal does not trigger before the close is below the low of the prior bar, at which point, unfortunately, we're halfway down to the lower expansion bands here. So perhaps a better approach here is to place a stop order a few ticks below the noise level to trigger the trade. We'll look at a few ways to set that up with Bloodhound and Blackbird in a follow-up to this presentation. So if you use those tools, make sure that you've registered for our newsletter and you'll get an invite to that. The main point here is, of course, to establish the average volatility seen prior to the regular open at 9 o'clock. So by focusing on the time window between 8 and 9 in the morning, we catch industrial production factory orders, CPI, PPI, GDP, employment, and retail sales. And when that economic data is released, you'll know what the typical noise and expansion levels for that bracket is. And therefore, you'll be in a better position to enter and exit position related to those events. So in short, this will allow you to complement and address some of the shortcomings we see with the squeeze or the classical squeeze indicators. First, it is of course lagging and will only fire after the volatility has shifted. So meaning that you'll often miss the first leg of a news breakout. And secondly, it does not really tell you a lot about where to place your orders or how to define when a breakout is valid, whereas these noise levels will give you that before the actual news event. Okay, so summing up here, we looked at the 3 squeeze scenarios: the Bollinger Squeeze, Carter's version, and the full squeeze. The library version has the scenarios that we discussed, and the Carter squeeze will show you both volatility and consolidation. And then we had a look at the historical volatility that can be used to determine valid breakouts during news events. So you can configure a percentage for each of the noise as well as the expansion bands and display them as smaller or larger distance from the open. And for today's talks, we only looked at the daily range projections, but you can also do the same for weekly or monthly projections to get an idea of where we are in the broader market cycle. All right, so I've also created a event special for you guys here today. We got the range projection suite as well as the indicator library, where you'll find the squeeze indicator, and list price for this is $470. So you'll get a pretty good discount using the lizardindicators.com/squeeze link. And keep in mind that the squeeze indicator is only one of about 150 indicators included in the library membership here. As mentioned, a wide range of tools for technical analysis. And if you want to have a look for yourself, head on over to our page, browse the library. The membership alone is available for a one-time, no recurring charge of $195. And once you're in, you'll get all future updates free of charge. Of course, I also suggest you take a look at the premium section where you'll find the range projection suite. You can sign up for a 14-day free trial as well via the indicator page. All right, so that just about concludes my talk. You can get in touch with me via the contact form over at lizardindicators.com, otherwise at info@lizardindicators.com. And so with that, I'd like to hand it back over to Lee. I hope it's been of value to you, and I look forward to seeing you in the membership section sometime soon.
Okay, thank you very much, Chris. Really appreciate it. Can everybody hear okay and see the new intro screens as we go on to the second part of this presentation? Give me a heads up. Let me know that you can see everything. And okay, that's great. So just to clarify, so if you sign up for Chris's, what was it? It was $195, Chris. I don't have your charge, the price in front of me, but
yeah, that's right. It's $195 for the library.
Okay, and those indicators are open source, the 195, so people can modify them and change them on their own if they want to?
Yep, that's right.
And you just ask that if somebody does that commercially, for instance, that they would give you credit and get permission, I would assume, right?
That would be very nice.
Okay, good. So thank you very much. I really appreciate your joining us today, Chris. It was really great. We are at 10-Minute Trades, we use the squeeze all the time. And there was something great that Chris has done for us in this webinar. So let me get started and give everybody motivation to take advantage of these great offers, because first of all, it's rare in this world that anyone would ever let anybody see the code. And that's really a big deal, because that means you could take indicators and configure them with your own programmer, and make these indicators more customized to you specifically. And that's very powerful. So that's something. And what I'm going to show you today also is just in a short period of time, Chris was able to do something for us. And I'll show you what I'm talking about. So still welcome everyone. Again, the magnet meets the squeeze. My name is Lee Goldstein. I'm the trading director for 10-Minute Trades. Remember, all the trades we discussed today are for educational purposes. It's possible to lose money trading futures. Welcome, Chris, and thanks for presenting. And today what I'm going to get into is our magnet strategy. And the magnet strategy is a perfect strategy to marry with the squeeze. And in fact, we have done many webinars on setting up your charts for news trading, and one of the main things that we use is the squeeze on our charts. Just as a reminder to everyone, we trade appointment-based trading is our methodology. We use the NinjaTrader platform, and what we're talking about this morning, the library, Chris's library, this is for NinjaTrader. So sometimes people get confused. You have to use the NinjaTrader platform, and we are using futures also. At 10-Minute Trades, we have a system, and I'm going to talk about the magnet trade strategy today. Quickly go over what our system includes. We've got NewsTrader software. Here's all the elements of our system: the weekly schedule, the daily trade reports, trade room access, our NewsTrader strategy, the magnet strategy, the trap strategy. We basically have 3 strategies that install into NinjaTrader. We have our free weekly schedule. Anyone can sign up for our free weekly schedule. Just go to our website, 10minutetrades.com, and opt in for our report, how to find your own 10-minute trades, and we'll send you the schedule. And then when you become a pro member, you can get everything else in our subscription: the daily trade reports, trade room access, and all of our strategies. Nothing is held back. This is a sample of the weekly schedule, and I'm kind of going to zoom through the basics because I've done 1,000 webinars over the past year. They're all public on YouTube, and that's also a reminder: go to YouTube and search for 10-Minute Trades and sign up for our YouTube channel. There is tons of information on learning how to trade the news and all the tools that we use. Our weekly schedule is the first tool. It's valid for any trader, whether you trade the news or not. You want to know when the news is taking place so that you're not stuck in the market at the wrong time. And this is a very recent, it's this week's news schedule, and it shows the trigger, the event we're trading. We show when our trade room opens on our schedule, the time of our events, the day, of course, and we have notes when we're going to stream on YouTube. We stream 3 or 4 times a week, and whether or not the event gets what's called a DMM, the daily trade report. Some of our events get these reports that we call the daily market movers. Not all of them, and that doesn't mean that an event is bad to trade or worse to trade than an event that doesn't get a daily market mover. It just means that many of our events get a different kind of analysis than others. And our DMMs, they've been around. They used to be called HIRA reports. They've turned into a much more sophisticated event. And our old reports looked like this. They had much less information on them. Over the years, they morphed into the daily market mover. We have a journal on the report. If it's a monthly report, you might get as much as 6 months of information about how that report has been trading. Sometimes you get an alternate setup like we have on the bottom here, and information, text information about the event. But the most interesting part of the daily market mover, it's mailed to you, emailed, and it's on our website the day before the event. So you always know in advance how to trade an event that gets this kind of analysis. And the point is, we have a specific setup that we're looking at, that we're seriously considering to trade in the trade room. And that information you have in your hands the day before, so you have time to test the event. We do the kind of research, we're not necessarily saying we don't use indicators, but we're also analyzing the way that events move. And we do deep analysis on the way that events move. And that's one of the major impacts in how we come up with our setup. So instead of looking at, for instance, Elliott wave or Ichimoku cloud, we're looking more at highs and lows of the day, the squeeze, as we said, pivots, more indicators that are very momentum based or level based, because those are the kind of pivots that are very powerful around the news. And then don't forget appointment-based trading. It's a time-based, pre-planned approach to the market. We schedule our trades usually up to a week in advance, but you can schedule them further out in time. The big issue is make sure that the calendar you're dealing with is accurate. We have three major categories that we look at to create these events, and we use these categories to find our events, and I'll show you where we get the events. But the categories we're looking at are high impact economic reports, jobs reports, GDP reports, rate statements. Those are one type of category that moves markets. Big company earnings reports move markets. Market opens and closes, they move markets. Currently, we're trading the market open pretty much every day in our trade room. There are hundreds of these events, hundreds of triggers within these three categories, and we help you find which ones of these events are the best to trade. We find these events on the various calendars. I'm not going to go through all the calendars because we do it in every webinar. Forexfactory.com, investing.com. I love investing.com in particular because we use that website to integrate on our charts so that we could see the news results while we're trading the news. In other words, down under in our chart, I actually show everyone, and it's one of the things that we do every day in our trade room. We show our members how to very, very easily make investing.com actually a part of our trade room, so that when news comes out, what happens is investing.com shows you that news result in real time, and we can just put it on our chart and make it a part of the charts, and then we can watch that news event come out, and it will help us determine, do we want to stay in the trade? Is it a news event that should move the market in a certain way? All of these things in conjunction with the squeeze, with volume, with price action, with levels. Maybe we're sitting at the VWAP and we can't break the VWAP after the news. That might be a sign that we're going to go in the other direction. And then, of course, the reason we're here today, the magnet. And that's the main thing that I'm going to talk about today. Just a reminder, the ways that we trade, you can trade in a prop account. Just make sure the company you choose follows the rules that you want to use. Some companies will not let you trade the news, okay? And we are a Bullinox affiliate. I'll give you our link because I think, correct me if I'm wrong, I think they still have a sale going on. And I'm not positive if their sale is still going on, but the key to buying or becoming a member of, in my opinion, of a prop company is wait for a sale. So when you get started, you don't spend a lot of money. And we're not going to get into what prop trading is today, but essentially prop trading is you can use someone else's money to do your trading. You don't have to spend money to open an account, but there's rules. Obviously, no one's going to give you money in a second. It's an alternative to using your own money to set up a cash account. And you can trade the way that we trade in many of those prop accounts. We have news trader software, magnet trades, reversals, continuations. Our software strategies are custom add-ons to NinjaTrader Our strategies have multiple setups. They're automatic or semi-automatic, and they can be discretionary, and they can automate your entries, targets, and stops, or you also have the ability to manage, because our software is what we call a super ATM. It's a automated trade manager, but the reality of trading is sometimes you don't want full automation and you're going to want semi-automation, where maybe it puts your orders on the chart automatic and then you manage your way out of a trade. That's a very good way to trade many news reports. So let's get down to the real reason we're here, the magnet strategy. So first off, you have to design and understand what a magnet is. Magnets, very simply, are levels on the chart. And think about it this way. A magnet is an exit, okay? Magnets are exits. So what might be an area that people are going to plan to exit? You might exit when you hit a high. You might exit when you hit the VWAP. You might exit when you hit the PP pivot, right? So those, you might use your own custom indicators. Maybe you use all of Chris's indicators and your favorite indicator is a sort of, let's say it's a cloud indicator, and at the bottom of the cloud, you want to use that level to exit. Well, we have a custom magnet strategy, part of our main strategy. You can use your favorite indicators, or you could use our automated high of day, low of day. When you install our software into NinjaTrader, it just simply becomes part of the charts. This is NinjaTrader, the charts. It's you, when you right click the trading chart, you just click the word strategy, double click magnet trade. If I do nothing and just leave it the way it is and press apply and OK, leave it in sim, because obviously I don't want to trade randomly without looking at the market. So put my charts on sim and just turn it on. I've turned on a random magnet trade that has a level, okay? It's got a level here that it's using. But the idea, the real proper way to trade the magnet trade is to right click strategies. And then for instance, if I'm trading HOD, high of day, low of day, all I need to do to set up a simple trade is put a number of proximity, and we always use 5 or 10. It's already pre-configured for one order. It's pre-configured to exit at the magnet, and I'm going to explain more carefully what a magnet is. And my stop is 20 ticks. Longs are enabled, shorts are enabled. When I apply and OK, now we're going to get kind of a very good logical setup. If I shrink my charts, you'll notice I've got these heavy lines on the chart. Those are my entries. When I enter this heavy line here, the magnet is the exit. The green dotted line is the high of day. The red dotted line at the bottom is the low of day. High of day, low of day, VWAP, those are magnets, because magnets are defined as areas on a chart where that many traders always look at. Traders are always looking at the high of the day. Traders are often putting their stops near the high of the day, above and below. Always, I hate to use the word always, often using the VWAP to place orders above and below the VWAP. Those are magnets. Because all those orders are being placed in those areas, price often gets pulled into those areas. Magnets are expected areas of price level to be reached. So what we do with our strategy, we wrote a strategy that allows us to set up our entry manually by just moving the entry. It's just a thick little line. And then our strategy is pre-configured or totally configurable very easily by just changing the numbers of the configuration. So when we trade, my favorite system to trade is highs of days and lows of days, because they're often hit multiple times throughout the day on most instruments. So if you love trading oil, you love trading gold, you like to trade the mini S&P, those are great instruments to trade magnets, because think about it. Is the VWAP always being tested with the mini S&P, the ES, or the NQ? You bet. Is the high of day often being tested? Of course. Is the low of day pivots? Yes, yes, and yes. Those are magnets. So the magnet strategy just exits at the magnet. Actually, we thought we'd be cute and clever, and it's a great way to do it. -3 means we're exiting 3 ticks before we actually touch the magnet level. And that essentially is the whole simple concept of what a magnet strategy is. But I'll show you the way our strategy works. The extra sauce here today is when you add the squeeze into this strategy, you can trade before the news comes out, after the news has been released. It is like Chris had said, that when you trade the news, most indicators are lagging. It's very hard to look at an indicator at the moment news is trading and say, wow, that indicator can keep up. Most of them, they just cannot keep up. It's just not possible. But right after the news, when the market calms down, and it's only a very, very short period of time, sometimes it could be 30, 40 seconds or a minute, and the market has calmed down enough that now your indicators become usable again. So Chris was nice enough to actually create a version of the TTM squeeze that we've been using specifically for us. They did not have it in their indicator library, but again, if you purchase Chris's library today, and if you take the offer I'm going to give you when I'm done, you'll be able to join us, use this custom squeeze indicator that Chris created, and learn about and trade our magnet strategy. A great combo, because think about what a magnet is. How do you know when it's a good time to think about trading a magnet? So look, if you're trading a high of the day, you don't want to be entering that high of the day. For instance, this is a gold chart. If gold is down $30 right now, you're probably going to think harder about going long than you are about going short. But you're going to think a little bit less hard if you've got the squeeze working in your direction, if you've got candle color working in your direction, if you're on top of certain levels. That's the importance and the beauty of the squeeze. It can help you to decide when to enter or when to think about starting to enter a magnet trade. So we love the squeeze, and we've been using the squeeze for years after the news, and more and more and more these days, because the markets are more and more complicated, and the squeeze is very simple to understand the signals. So let's say, for argument's sake, you're watching the markets today and you're thinking to yourself, well, I do think that the high of day here on gold may get tested. I'm going to set up a magnet strategy to have that test. It's very simple to do. So from scratch, all I have to do is right click the chart, click strategy, double click the magnet. High of day, low of day is our default. So my setup is already going for the high of day, low of day. We change our percent proximity. I like to make it a 5. And when we do our next software update, which is going to be very, very soon, that default will be changed. So our proximity is 5. That just means it's very close to the magnet. We have a position 1, that's just the number of contracts we're trading for one position, and it's one contract. And then we have a target, and our target is -3. And that just means 3 ticks before you actually get to the magnet, our exit. We're gonna exit our trade right before we get to the magnet. And if I wanna do a trade where if it bursts through the magnet, I could set up another position All I do is add position 2, the number of contracts I want to trade, and I would make the target, if I want it to be 10 ticks above the magnet, I just make that a 10. Then I put in my stop in ticks, not complicated. Let's say I want a 40 tick stop. Long enabled, yes. Short enabled, yes. You can have a sound when the magnet entry gets reached. We have other features I'm not going to get into today about moving your stop if your target gets hit, all sorts of trade management that our regular spike trade news trades use, and many of them are available for our magnet strategy also. And then you just simply choose the account you're trading in. If you're trading cash, choose your cash account. If you're trading in one of your prop accounts, no problem, choose that. We label all of our trades here at 10-minute trades. Why? Because we often trade more than one setup on the same chart or at the same time. When we're trading news, we very often might trade a breakout first, and then we will hang around waiting for that opportunity after the news when we use the squeeze and we get the magnet ready. That's very often an after the news trade. And then all I have to do is apply, okay, make sure my charts are on the same account as the software is set to, enable my magnet, and now notice I've got this heavy line. We're closer to the high than we are to the low by quite a bit. Right now, I don't think the low is coming into play, but remember proximity? Well, proximity is what put this heavy line exactly where it put it. There is a calculation that doesn't matter anymore because not years ago, but when we first invented the magnet trade, we only had proximity to place our entry. Then very shortly after, we had the ability to move our entry just by grabbing it. So proximity doesn't matter. It doesn't really matter other than the fact that it puts the order on the chart. So make it a 5 or a 10 and don't worry about it. Grab your order, let your analysis decide where you want to enter, and when price goes through this heavy line, it will enter the trade. What if I think the market's exploding? Now it isn't, but what if it were exploding in the direction of the magnet and I wanted to get in early? Well, I could just press the enter now button. Notice my exit, which is my target, was 3 ticks below the magnet. And I'm now in a long trade because that's what I pressed. I pressed enter now. We're closer to long than short, and it put me in the market long. That's one way to trade a magnet. The second way is a little bit more standard. I'm not going to trade it early, but I may look at where my thick entry line is. Maybe I want to enter above a certain level. Maybe that level has been hit multiple times over the past 3 hours and it wasn't broken. So I might want my order above that level. Look how easy it is to place the order. I can also choose the direction I want the magnet to work. Sometimes you'll be using custom levels, or sometimes you'll be an even distance between long and short. Pressing the long direction to the short direction makes the trade safe and knowing which direction you want to be trading. The other thing that happens is, let's say the magnet reaches our price level and we're kind of not paying attention. Something interesting will happen. You'll get a sound in your ear or in your speakers and the button will blink purple. That tells you you hit your order level. Press the entry button and your trade will take place. That's the semi-automated magnet entry. Then we have a fully automated magnet trade. Set your trade up just by doing all the things I just showed you. Put your order in the place that you want your order, right? And now if you press the magnet entry button, it turns purple. which means the magnet is automated. When it gets to the order line, it will fill the orders and the trade will take place. It'll put your stops and your targets on the chart. And basically you have almost a fully automated magnet setup. What's nice about it is it allows you to, of course, to choose the number of contracts. And of course, you know, you can make decisions. Do I want to move my stop if the first target gets hit? Maybe you want to move your stop to safety. Maybe you don't want to do anything. But now when I see that purple box, magnet auto mode, I know that when we get to that line, my magnet is going to work automated. I don't have to think or do anything else. Ironically, if you look at what's going on here, it really looks like the MNQ is going to do a real magnet. So let's say you're shopping around, you know, you're just got in, it's right after lunch, and you're looking for a trade. You want to look for a magnet trade, and you just happen upon the MNQ chart. I'm going to right click the chart, double click magnet trade, high of day, low of day. I'm going to set it to a 5. I've already got one position. It's MNQ, so I'll throw an extra position. I'll make my stop 50 ticks. I'm not going to do anything else. It's already long short. I'm going to put it on a real live chart. I'll put it on a real prop chart. I always label it MNQ magnet, apply it, okay it. Make sure that the chart I'm trading on matches what I chose in the strategy. All right. And what I chose in the strategy is there. I'm a little far. I don't want to fill yet. I want to get a little bit closer to that magnet. So I moved my order a little bit higher. I want to see if we can get a little bit more momentum. If you look here, the squeeze is in our favor on a 30-second chart, but volume is very low. So you want to take all of those things into consideration. I think we will get this test of the high. I'm going to throw my magnet into automated mode, and maybe we'll get a trade here. Maybe we won't. If it works, I'll let it trade. It's MNQ. It's not going to blow up my account. It's not a lot of risk. 40 ticks. What do we do? 50 tick stop. It's 50 cents a tick. 25 bucks a contract. You get it? Not a lot of risk, even if you trade a couple of contracts. One other nice thing about our magnet strategy, like I said before, you can use any custom indicator, and I'll show you the custom setup in a minute, but also it's great for prop trading. A lot of the rules in prop trading, many companies don't let you trade the exact moment of the news. But with the magnet strategy and using the squeeze to help you with your entries, you can trade consistently and you can follow consistency rules that many of the prop trading accounts require. You're not making $80,000 on one trade, $20 on the next trade, but your profits and losses are more consistent, and they love that in prop trading. So you could see how simple the magnet is to trade. Let me show you. I just copied a couple of quick magnet trades that we've taken in the past. This was a gold magnet that I took. Let me show you. We were trading this in a prop account. It was 10:20 in the morning in September 2024. The year doesn't matter. One of the beauties about magnets is, unlike robots, which need constant tweaking, magnets will always be magnets. People will always trade high of day. People will always trade pivots. That is an incredible beauty of magnets. Magnets will always, and I never use the word always or never in trading, because it always changes. The markets always change. But with magnets, there's always going to be these magnets. It's a great strategy. So see, we got filled. The price chopped a little bit. Our stop is well out of the way. It's above a consolidation area, and we're sitting tight. We're not worrying. Right now, the squeeze is in our direction. and we're just chilling out. You know, I was in the trade room probably talking away, and watch, the magnet trade is going to get pulled into that low of day, because lows of day are magnets. Beautiful, perfect magnet trade. Then I've also traded oil as a magnet trade. Here's another one. The concept is so simple. The biggest, hardest part of trading any magnets is just making sure you have a good trend working in your direction. You can use the magnet strategy for trading at the exact moment of news, and it's a little bit more difficult to do it that way, but we love trading magnets either often before the news, you get nice moves, and then of course after. So watch, this was oil. The oil magnet, we had an order. Oil was pretty bearish when we were ready to take that magnet. We felt pretty confident oil was going to test the low, and it did. It's going to fill our order, and then it's going to go and test the low. Exiting at the low is the way you win at that magnet, and bingo, there it goes. Then we stayed in the room. We were on to a different trade a little bit later, and we set up a magnet for a high of the day trade. Micro oil in this case was fairly bullish. It was up more than $0.50. And we figured if it heads up to the high, we'll put our magnet in auto mode. We got our fill, brought our order down to the magnet, -3 ticks, and watch, bingo, it goes. And that was a good one, where if you added that second position above the magnet, you had more profit available. The magnet is simple, it's easy, and really, really uncomplicated to learn. Hang on one second. Let me just help someone who has no sound. Sound is fine. Reboot. Okay. I'm assuming everyone can still hear me. I'm seeing my mic just fine. So we have one other type of magnet you can do, and it's very, very powerful. The custom magnet. You can use any indicator. All you do, it's basically exactly the same as everything I just showed you, except instead of using the high of day, low of day, you just choose custom level. Let's say you want to trade the VWAP, or you have a level 3980 is the level you want to exit. So you make 3980. I'm going to make 3974 because 80 is too close. 3974 is my custom level. All I do is type in 3974. One position is already, one contract is automatic. I'm going to just set a random target of 20 and a random stop of 20, and it's a short direction. I'll handle the direction from the screen, okay? And I'm going to label my trade. It's gold, so it's a GC magnet. And all I have to do is apply it, okay it, turn it on, enable it, make sure I'm in sim and my chart trader is in sim. Bingo. There's my exit. All right, that's my magnet. So if I was looking at one of Chris's custom indicators, he's got 100 of them. You know what I mean? Maybe you've got a channel that you're looking at, and the channel is at 3974 is the end of the bottom of that channel. Bingo. Maybe the end of that channel is all the way up here at 78. No problem moving my order to enter there. Remember, this order is the entry, the magnet is the exit. But when you first start the setup, you're putting the exit on, and then you're moving the order to your entry, okay? Very simple. That way you don't have to calculate anything. You don't have to think about anything. So when you set up a custom magnet trade, use the custom level always as your exit. That's your magnet. So if I had a magnet of 3988, for instance, I just type in 3988. I can leave everything else the same. We have one position, 20 tick target, apply it, okay it, watch what happens. That's our exit. If I want to take that as a long magnet, I'm going to move down my entry. Now, normally you would probably have an indicator that's showing you that line. So you're not guessing because it's blank. You have that line that's showing you where your magnet is, what the exit is. And then when your order is placed on the chart, you can easily decide where to put your entry. If I want to make it automatic, bingo, press the automated button. So it is so simple to set up a custom magnet or a high of day, low of day magnet strategy. Chart setup, as I said, is critical. We use the current day open, high, low, pivots, order flow, VWAP, volume, net change display, and of course the squeeze. I'll be giving a webinar Friday with Rightline noon, and you'll get information, and I'll be talking about setting up your charts for news trading. So I showed you what triggers a magnet trade. It's the price being pulled to that area. So here's the deal for us. Chris made you guys an awesome deal to grab all his indicators. Well, you want to have a trading system to use those indicators in. So how would you like to join us for all of our upcoming news, earnings, and magnet trade rooms? Every morning now we're trading the market open, and we're also showing magnet trades if you want to trade in a little bit more of a structured way than, say, a spike trade. You can get access to all of our software, every bit of it, the news trader strategy, the daily market mover trade reports, our magnet strategy, our trap trade reversal strategies. Everything is included. Our trade room subscription is included, so you can be shown how to use all these setups and learn exactly how to do it. Trap trade, like I said, I explained how all this can trade in a prop account. $20.25. You can take our 30-day trial. The trial is going to expire tomorrow night at midnight. Just go to www.gopro25.com. If you take Chris up on his offer, you'll have availability of the special magnet that he created for us, which you see here. The special squeeze, I mean, that he created that we could use with our magnet strategy on the left here. And I just literally started testing it. I'm really excited about it. It's very adjustable, and they're very, very responsive, great people. So www.gopro25.com. You can't beat the deal. You can try our whole system and Chris's indicators for just $20.25 and the deal that Chris made. So head on over to www.gopro25.com. Anybody have any questions? What you're going to get is our news trader software, the magnet software. We'll teach you the appointment-based trading method. You'll learn how to choose the events you want to trade. Earnings trade rooms. Earnings are starting again in about 10 days. Learn how to trade stock earnings with futures. We've invented a way to do that. Trade on a schedule, the schedule you want to trade on. I'll guide you step by step in all the trade rooms. All right, if you have any questions or need any help, help at 10minutetrades.com and www.gopro25.com. Hey, I just heard in my headset we got filled on the magnet. Look, just got filled on the MNQ magnet. Now, is it going to work? If we get a push in momentum, we're going to have a winning trade here. If momentum fails, the trade won't work. That's exactly how the magnet strategy works. Look, we've got a stop. If the trade doesn't work, it's not going to blow my account up. I would put my stop. If I were trading this in our trade room with our members, I would move my stop below all of the current activity prior to the fill, okay? So I'd make a little bit bigger stop to give us a better opportunity to have a successful trade. One last time, www.gopro25.com. I want to teach you how to do this type of trading. If you're uncertain and you need more info, email us help@10minutetrades.com, and check out our YouTube channel for plenty of live free webinars that we've put on there. I want to thank everybody for joining us. I hope you liked this webinar. I can't think of a better combo than 10-minute trades and the squeeze, and I'd love to see you all in the trade room tomorrow. So folks, have a great rest of your day. Watch the Phillies win that game tonight, and I'll see you all in the trade room. Take care, everyone, and I'll see you soon.